taking longer than we would have thought or hoped for, but in my mind, it's inevitable if this kind of money keeps being made. So eventually they're going to look at those miners and they're going to go down the food chain toward the juniors. And they're going to start pressing the big producers, not just for earnings, but where is your reserve placement? Because we see this bull market going for years.
So, Brian, 71% of institutional investors hold 0 to 1% of gold assets, and the Western investor has largely been absent from gold ownership during this time frame that it's gone up. In your analysis, what will ultimately make the precious metals bull market become, more obvious to both the institutional and the generalist Western investor?
Well, you need a few things. You need the gold price uptrend to remain intact. That's consistently rising, and that's going to attract a lot of technical investing. It'll attract a lot of generalist investors who come into the sector. Now, today there's a lot of different ways for investors to get leverage on that move. They can. There are funds that have 2x on gold, either upside or downside. You can go to futures and options, a lot of different ways to get leverage. But I think that the gold producers, the big miners, delivering the kinds of profits that they are now, the kinds of margins that they have now, I think the markets the investors in general are going to have to recognize that at some point. I think Wall Street is starting to wake up to these kinds of cash flows. It's taking longer than we would have thought or hoped for, but in my mind, it's inevitable if this kind of money keeps being made. So eventually they're going to look at those miners and they're going to go down the food chain toward the juniors. And they're going to start pressing the big producers, not just for earnings, but where is your reserve placement? Because we see this bull market going for years. If you're going to be around in a few years, you're going to have to really build up your reserves and build up your production. That's going to create the kind of M&A frenzy, I think, that we have seen in the past and are hoping for again.
So it sounds like, and I don't want to put words in your mouth, but it sounds like the institutionalist investor is going to wake up before the Western generalist investor.
Yeah, but I think they're probably hand in hand with each other. It's hard to draw those kinds of distinctions between the two. Retail investors are going to get it more quickly, I think, because they're always looking for the speculators, at least among them. I noticed that attendance at my conference obviously tends to swell during a bull market, but people get more excited. The calls come in from people who haven't been in the market and are new to the sector, and we're starting to get more of those. I expect the next couple of years we're going to see a big influx of individual investors who are pivoting from, the Teslas, the AI plays, and the like.
So you've been publishing the Gold Newsletter since 1985. You professionally worked through the 2000s precious metals bull run. What parallels and differences are you seeing today between today's run and what you witnessed in the early 2000s?
Yeah, and just to correct you, I've been in the market since 1985, but the newsletter was started in 1971 by my late friend Jim Blanchard, who was instrumental in getting gold legalized and using Gold Newsletter to get gold legalized for American citizens. But if you look back on the cycles, the key differences, I think, in this one are twofold. One, it's taking a lot longer than we had expected before. And I think that's largely because of these competing sectors that are around now. I mean, crypto and Bitcoin are one of them that are stealing some of the speculative fervor from gold and silver. So that's part of it. But the other part is that I think this bull market is close to being the last one before there's some official attachment between the currencies, reattachment between currencies and gold. I think that cycle is starting to play out now. and we are in the end game. But again, the timing's tough. I don't think anybody can know, but I think we can recognize the trend, and we can be confident that gold and silver are the ways, and associated investments are the way to play that trend.
And what about similarities? Are you seeing any similarities between today's bull run and the previous one?
Yeah, it tends to form a progression where, metals miners, big miners down to the juniors. Over the past few weeks up until the election, I started to see the juniors get more attention, more anecdotally than anything else. I'm seeing more financings in the sector, more financings at better terms, financings that get opened and closed very quickly or essentially are filled up before they're announced, and then they're upsized. So that kind of anecdotal evidence to me was encouraging. And in particular, we're starting to get that kind of FOMO, the fear of missing out on the retail market that's been really damaged and gotten very gun shy over the past few years. I think that's starting to alleviate, and people are getting excited and they don't want to miss out. That kind of fervor tends to spread beyond the borders of this, very incestuous junior mining market that we're all involved in. Once people start making money and talking about it, then it spreads outside and we get new money in. So I think that's a similarity. We're starting to see that. But again, the difference is that it's happening a bit more slowly at this time than we have in the past.
So, Brian, 9.4% of Tesla's profits, you brought that up earlier, came from solar panels and their energy storage business, which require a lot of silver. Elon Musk owns Tesla and now has Trump's ear, and Trump is also on record as a supporter of solar. Is silver poised for a major move higher now that Trump has been elected president of the United States?
I think silver's poised for a major move higher, but I don't think it's necessarily anything to do with Trump. I'm always been somewhat skeptical about the industrial usages of silver as having an effect. I have to recognize, though, that from a number of sectors, it's starting to really put a strain on supplies. And in fact, over the next 5 to 7 years, I think it's going to have a big difference on the silver market.
So gold and silver stocks have had starts and stops and excitement and fits during this bull rally by the metals. So far, the mining stock train has not officially left the station. In your view, why will the train be leaving the station soon?
Well, because I've started to see it happen. As I mentioned, I'm starting to see that kind of FOMO in the market. I'm seeing friends of mine that have become very jaded by the past few years now looking wildly for financings to get involved in and trying to shoehorn their way into ones that they discover, and in some cases being cut back or turned away. We didn't see that over the last few years or even 5 years. And it's starting to happen. So I think it's kind of the natural progression that happens in every case in these situations. It's just taken longer this time.
So, Brian, gold mining company balance sheets, you've mentioned it already, they're beginning to rapidly improve as gold prices have soared and stayed elevated and oil prices have dropped. In addition, borrowing costs are dropping as well. Newmont reported their numbers a few weeks back, and while revenues were up and profits were their highest in 5 years, the stock got whacked. It was a huge disappointment. In your analysis, what happened with Newmont, and is that an aberration or is that indicative of what all the miners are going to be facing moving forward?
Yeah, I think it's more of an aberration from two standpoints. I think Newmont itself was a bit surprised at how high their ASIC came in at a little over $1,600 when they expected far lower. And that's the other problem that they had. The other big factor was they not only didn't manage their cost of production well, they didn't manage market expectations very well. So the market did not see that coming, even though their earnings, their cash flow were tremendous and everything else. That cost component came as a shock. The market was expecting perfection, and that's a dangerous thing when the market is priced for perfection as it was. So the slightest disappointment started it downward, and Newmont's a big stock. Newmont is, in fact, the only gold producer included in the S&P 500. So it's a natural point of entry for generalist investors. It's the widest gold stock holding among generalist investors. So once you, in other words, it's easily shorted. It's easy to jump on the downward train as it is on the upward one. And that's what happened. It kind of exacerbated itself. Now, Newmont is a special situation in a lot of ways. They're still trying to digest Newcrest. From what I've seen, they've done actually a pretty credible job of that. I know that they're running frantically around their offices trying to figure out what to do with all of these new assets they have. And they will be divesting a number of non-core assets over the months and years to come. But they also have some production up-ramps ahead of them. The Ahafo North expansion, et cetera, are going to help them out over the longer term. So I think Newmont is not necessarily where I wouldn't necessarily recommend jumping on board. The stock right now is a big bargain, but I think they're going to straighten the ship going forward. And at some point, they're going to be the leader again in the sector.
So you mentioned all-in sustaining costs. For mining companies, that really can tell the story on the real rate of inflation. Many say you don't want to own gold miners whose costs of mining go up during inflation. However, there should be a history lesson here. The only time the cost of mining gold really fell was during the 1930s depression. In the 70s and in the 2000s metals bull markets, the cost of mining gold went through the roof, and yet the miners blew away the S&P. In your analysis, do you see a similar paradigm forming here where the miners' all-in sustaining costs continue to rise, yet they eventually outperform the S&P anyway?
Well, the biggest, or at least one of the biggest cost components on operating expenses is, of course, energy. It takes a lot of diesel to keep those big yellow trucks moving. The outlook for energy prices, I'm not an expert on that. I think the sanctions on Iran, the upcoming sanctions or enforcement of sanctions on Iran are going to have some effect on the oil market, but still it's going to be an era of drill, baby, drill for a while in the U.S. So I tend to lean toward the idea that energy prices will remain subdued, and that being a large component of mining costs, I think we're still going to see really fat margins produced by the miners from both cost factor and the price of gold factor and the price of the metals. So I'm pretty sanguine about that going forward. I think the margins are going to do nothing but expand. Now, one thing that's interesting, and it hasn't been a factor for literally decades in the gold mining sector, but gold mining is one of those areas where in some cases the best investments are the worst mining companies, the ones that have the highest costs. Now, that hasn't been the case over the past year with Agnico Eagle, but a company that has high costs will make more money percentage-wise, or its earnings will rise more percentage-wise as its margins expand as the gold price rises. So in a rising gold price environment, at this point, some of the better producers may be the ones at the highest costs.
So, Brian, in which part of the mining sector right now do you see the greatest opportunity for investment gains? Is it the major producers, the mid-tier producers, the junior miner explorers?
Yeah, I never really have been much of a thematic investor or analyst. I tend to look at each story individually because so many factors, as you know, can come into judging and appraising a miner stock, whether it's an explorer or a developer or producer. In some cases, some of the factors that aren't really a theme in the markets are really the ones that are most impactful for an individual company. But that said, I think there are two areas that offer the greatest upside right now. One would be the companies with really big resources, really large identified resources in the ground. In some cases, they've already had economic studies done on them. And this can be anything from resources that are being delineated and primed for development and sale to a major, to ones that were bought years ago as optionality plays, these big out of the money gold resources that were uneconomic at then gold prices. Well, surprise, surprise, at $25, $26, $2,700 gold, every single one of these optionality plays is not just economic, but wildly economic, robustly economic, and in most cases actually developable at this point. So I think that's one sector, those big resources that can be bought, be found in a lot of companies at less than $10 an ounce in the ground, that would trade in, historically for $100, $150, $200 an ounce in the ground. So big upside there. The other area I like a lot right now are these silver juniors, because silver has just started to show signs over the last couple of months of really outperforming gold and offering that kind of natural leverage to the gold price. Silver juniors offer leverage on top of silver, so you can stack leverage on top of leverage by buying the junior silver stocks.
Great lead in. I was just going to ask you a question on the junior silver miners. They're typically the last to move and the most explosive.
Mm-hmm.
Rick Rule has famously shared some examples that he's invested in. I don't remember the names that apply to these, but one that was 10 cents and went to 45, and another that was 50 cents and went to $65. In your analysis, are silver juniors grossly undervalued right now? Do you see any opportunity for some juniors to move like the way Rick got to experience in those previous bull markets? And do you see this cycle even as a rising tide raises all boats, or is it going to be more selective?
Yeah, I see a lot of opportunity. I don't know if they're wildly undervalued right now, but they may be considered to be wildly undervalued in comparison to where they're eventually going to end up. If we get $50, $60, $75 silver, you're going to see almost across the board, these silver juniors go up 10, 20x. So yeah, the opportunity is rich there. Now, it's still not the kind of opportunity exactly that we've seen in the past. One of the things that Rick was talking about undoubtedly was Silver Standard Resources. And I was literally in the room with him and Jim Blanchard when we were talking about and organizing the restructuring of Silver Standard in 1993 to create, at that point, the first pure silver play. There was nothing else like it that existed. And now, of course, there's, a few of them out there, quite a few actually. And there's a lot of different ways to play silver. But back then, if you were a silver bug and you were looking at a way to play pure play silver in the juniors, there was only one, that was Silver Standard. And very shortly afterwards, there was Pan American. And interestingly, Ross Beatty was on the Silver Standard board. And when he heard news of the new direction for the company, he immediately resigned because he had already had the idea for Pan American percolating in his head. And so it was a conflict of interest, and he immediately resigned. So great minds think alike. And that was, I think, a special situation. It took a while. It took 10 or 12 years for it to really start to take off. But those two plays were the originals, and they were the only two, so all the money went into them. Now that money is going to be diluted, but thanks to people like Eric Sprott, there's a good bit of money to go around apparently, and he's been investing heavily in some of those really highly leveraged silver plays.
So do you see a rising tide raises all boats scenario coming up for the miners as long as the prices of gold and silver stay elevated and continue to march forward?
Yeah, I do. With the caveat that there's a lot more boats right now than there were. In the 2000s, from roughly 2000 to 2011, was a very special period because your downside on a, wild hair and fire speculation in the junior mining market, your downside was probably not making any money, and your upside was 10, 20x, and then you'd roll it into another one that would go up 5x, and then you'd roll that into something that would go up 8x, et cetera, et cetera. It just built rapidly, but your overall portfolio did much, much better because you didn't really have the big losers as that rising tide lifted the whole market. Now it's probably not going to be as pure and consistent as it was back then because there's a lot of companies out there and they can be created very easily. They can't be killed. They can be born very easily, but they can't be killed very easily. So there's a plethora of them out there. But still, it's key to this sector to not lose money, to maximize your returns, don't lose money. And as that tide is lifting, it will make it harder to lose an awful lot of money and get wiped out in some of your speculations. And that's going to raise your overall returns.
So, Brian, what signposts are you watching for that's going to let you know that this precious metals bull run has hit its top and it's time to sell?
Well, it may be when they establish a price of gold, a set dollar exchange rate for the price of gold. That would prompt me to say, all right, that's great. Let's cash in our chips and go off to a beach somewhere. I don't think that's any time in the near future, either in terms of time or in gold price. I think that's going to demand a gold price in the range of what I said earlier or higher. If we wanted to back 20% of M2, it's a $10,000 to $15,000 gold price. So that would be kind of the peak. It's one of those things you have to trust your judgment, and you're never going to call it exactly. And I think that's something that investors need to realize. It's not a problem that we've had for the last 15 years or so on how to manage your winnings in a rollicking gold bull market. But the key is to recognize that you're never going to pick the peak. You're never going to find it. Never going to sell everything at the peak or even near to it. But what you need to do is to take money as you make it, take gains off the table. And by that, I mean, you don't sell it in your brokerage account and leave that money in your brokerage account. You need to take it out of that brokerage account, leave at least a couple of steps necessary for you to go back in to that market and put it in illiquid investments or passive income producing investments or just gold or silver or cash. But at some point, you need to dip a ladle into that flow of capital gains that you're going to start seeing in this kind of bull market that I see ahead. And you need to pull money out of the market and sell as you go. I mean, that was the secret to Rick Rule's great success, is that in a bull market, he sells something every day on principle, just on principle. But he's also he's got them plays coming in on the other end of the pipeline as well, but he takes them out of the pipeline as well.
Well, that's all fantastic. Risk management is so critically important, and I appreciate you sharing that. Well, this has been a fantastic conversation. Before we wrap up here and I ask Brian our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews just like this one that we conduct. They're all up there. When you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If you don't own gold, you know neither history nor economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Brian as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. Now time for our Golden Nugget segment. Brian, let's discuss your upcoming New Orleans investment conference. Will you share with us the highlights on the speakers, the sponsors, the exhibitors, what you expect the attendees to gain and take away by participating in the conference, and if they can participate virtually in addition to being present on site, and anything else that you want to share.
Yeah, thank you, Gary. The New Orleans conference is always a superb value in any investing environment and economic environment. And that's why for many years we've had a money back guarantee. If you're not satisfied, if you don't think it's worth, many times your cost to attend, we will refund you, just no questions asked, your entire registration fee. And we've very rarely had to do that over the past 15 years or so. But it's special this year for a couple of reasons. One, it's our 50th anniversary, so we have a lot of special events, speakers, social events happening this year, and we've really pulled out all the stops, really as we do every year, but even more so this year. The other special reason to attend this year is the happy coincidence that it's coming right at the beginning of a metals and mining bull market. And if there's one sure thing in investing, it's that this is where you want to be at the beginning of a mining and metals bull market. It's going to be a tremendous opportunity. Our speakers are, I believe, the best you'll find anywhere. We have James Grant, we have George Gammon, Rick Rule, Danielle DiMartino-Booth, Brent Johnson, Jim Urio, Peter Bookvar, Jim Bianco, James Lavish, on and on and on and on for dozens of today's top experts. It's a lot of fun. It's enlightening. It's entertaining. It's something that if you've never been, you have to experience to really understand, and you will be back again and again because there's just no better value out there. It's a force multiplier in this kind of a market environment.
What is, if you had to point to one takeaway that you think these attendees are going to walk away from with, what would that be? What would be the main takeaway?
Well, I think it's what you alluded to earlier, that the factors at work now are irreversible. They're decades in the making, and they are going to force metals prices much, much higher. So that the takeaway here is that if you don't do anything, you're putting your entire wealth, everything you work for, at risk. But if you go, you not only will learn how to protect yourself, great strategies to protect your wealth, but you're going to learn how to profit from these trends. And these are generational opportunities. I mean, it has literally been over 20 years, the early 2000s, since we've had this kind of an opportunity. And it's much better now. You know, in the early 2000s, the mining stocks were bombed out, but so are the metals. We had to be the wildest of dreamers to think that gold was going to go to record heights. Right. Today we have gold at record levels, all-time highs. So we've already accomplished that part of the equation. The amazing part is that the metals and miners are still near long-term lows. Not the metals, but the miners are still near long-term lows. So they will respond. They have to respond. It's a layup at this time. It doesn't take a lot of, you don't have to be a rocket scientist to see the opportunity. You just have to have a bit of common sense to know that with metals at record levels, or gold at record levels, and the miners at long-term lows, we've been handed a gift on a silver platter.
So do the attendees need to be on site? Is that the only way that they can attend, or can they attend virtually as well?
Well, we encourage them to be on site because that's how you can visit our exhibit hall, where we'll have about 90 junior mining companies, some of the better companies out there. You can commiserate with fellow attendees and listen to them and get their advice. And everybody, it's an environment where everybody shares their ideas. It's really a wonderful ambiance. Now, and there's still time. The conference is November 20th to 23rd, the week after next. Still time to come. We encourage them to do that, but we do have a virtual option. You can buy the virtual option. You can tune in and get all of the presentations live as they're occurring, but everything for everyone is recorded, and they'll have access to go back to the recordings and a written transcript of all of the general session presentations.
Wonderful. Well, Brian, thank you so much for coming on to Metals and Miners, for being so generous with your time, analysis, and ideas. I've really enjoyed spending the time with you. Would you share with the viewers any other important message you want to leave with those tuning in, where they could learn more about your work and how they can connect with you?
Yeah, come to New Orleans, whether in person or virtually. You can find more information at neworleansconference.com. And look at Gold Newsletter as well. That's goldnewsletter.com. I apologize for the dog barking in the background. She's getting antsy as well. Goldnewsletter.com. We have a free special report like you do on how to invest in the metals and miners. And I think it's an invaluable resource for anyone who is either new to the area or experienced.
Guys, I've been following Brian for several years. I've watched him, in multiple podcasts before he's come on to mine, which I really appreciate. He's a cornerstone in this industry. He's somebody you got to be following, whether you hop on his newsletter or you're just following him either through YouTube or through his Twitter. It's very important that you follow Brian Lundin. I will have all of your information up on the screen. There'll be links to click through to get over to your newsletter, to get over to your Twitter, to get over to your website, and to get over to your conference. Thank you so much for coming on. And Brian, I look forward to having you back on sometime soon. Everybody else, thank you for watching. On the consumer economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews just like this one that we conduct. They're all up there. When you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm